Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Razum Pereira. In a highly volatile session, equity indices on Friday erased most of their losses in afternoon trade as markets rebounded from record lows. The benchmark BSE Sensex and the broader NSE Nifty plunged over 10%, hitting their lower circuit limits within the first 15 minutes of opening of the session. The steep dive in the markets in the opening session eroded more than 12 lakh crore rupees of investors' wealth. Mild recovery was seen in other Asian bourses too. From Wall Street to Asia, the recent sell-off in the global stock markets has triggered trading halts in multiple stock exchanges. In the US, trading was temporarily stopped twice this week after the S&P 500 index fell 7%, triggering the first threshold for a circuit breaker aimed at preventing markets from wild swings. In Asia, circuit breakers were also triggered in many exchanges, including India, Japan, South Korea, Indonesia, Thailand and the Philippines this week. Circuit breakers are measures implemented by exchanges when they consider price movements to be overly volatile. On this edition of The Big Picture, we will analyze the volatility in the stock markets and the impact on the economy. Joining me on the program today are Sushil Chandra Tripathi, former Principal Secretary Finance, Uttar Pradesh; Dr. Charan Singh, CEO, eGrow Foundation; and K. Badrinath, Senior Journalist. Thank you to all my guests for joining me on this edition of The Big Picture. So, Professor, let me begin the program with you. Let's first analyze and talk about the bloodbath that we witnessed in the Indian Stock Exchange at opening bell this morning.
Yes, I agree with you. It was a bloodbath. But then one has to remember this was the bloodbath not only in the Indian market, but if you look at the Japanese market in the morning, they had touched the lowest level since 1990. And if you look at the US market on Friday, they had also gone down to the levels of 1987. So the bloodbath in the Indian market was not out of the trend. And I would say that there are two factors which one has to weigh in. The global scenario is really getting grim and grim by the day. And that's exactly what was reflected in what we witnessed today morning. The other thing which I wanted to say is you would have noticed that during the day there was lots of volatility, but soon the market recovered and bounced back and closed at a decent level, I would say, given that the bloodbath was there. So these two things, yes, on one hand the global situation getting grim and that getting reflected and should get reflected, getting reflected in the Indian market. The other, people, the investors very quickly realized that here is an island of stability, good growth. You have just seen the figures of IIP that had come, the inflation figures that have come. The government did swing into action as far as the cabinet meeting, and you know the decisions that they announced, specifically the banking. So there is stability in the Indian market. So I would say these two trends have to be seen, and the optimist that I am, I think India is an island where lots of stability can be seen in the next few days.
Okay, all right. So, Mr. Tripathi, let's also analyze what circuit breakers are and why there was a need for the BSE and the NSE really to halt trading early this morning of, a first in 12 years.
You see, let us first see what the problem is. There are two issues, health issue and the economic issues. And of course, health issue impinging upon the economic issue. Earlier, of course, it was only a health issue in China, which impinged upon the Chinese economy. But Chinese economy being the second largest and China being the manufacturing hub of the world and also the largest exporter, it started affecting economies all over the world, including India. Then, of course, the health issue spread. It spread to Italy, Iran, and finally to United States. United States being the largest economy, the most important economy, the once people got to know that the spread of coronavirus is in Europe and also to USA, with very important persons like the health minister of UK, the wife of Prime Minister of Canada, and Angela Merkel saying that 60 to 70% of Germany may also get affected. It became a large global issue. And the Indian economy is also globally interconnected. It is globally linked much more after 1991 reform. So we could not be insulated. And therefore, the Indian equities started falling very rapidly. And therefore, the circuit breaker is a regulatory mechanism of NSE and BSE, when the Sensex starts falling, and the indexes start falling or start going up very fast in a short period of time, then in order to check volatility and to bring in some element of rationality in this trade, they impose the circuit breakers. And today in the morning, they had to impose circuit breakers because the Sensex fell by more than 10%. And I think they had these numbers were indicated by them that if it falls below 10%, of course in US it is about 7% or something like that. So they had to impose circuit breaker in the morning because Sensex fell by more than 3,000 points. But you know, interestingly, after the circuit breaker was removed and some rationality came into the system, I think the institutions, including government institutions and mutual funds and others, they thought it was a good opportunity to buy also, because the fundamentals of Indian economy continue to be the same as they were about a week ago, a month ago. And Indian government is acting proactive both on the health issue and on the economic issue. So because of these factors, therefore, all the losses which took place in the morning, they were covered, and in fact both NSE and BSE ended with a positive gain. So
right.
I think both NSE and BSE managers, they acted wisely and they controlled the volatility, and thereafter the institutional investors stepped in so to restore stability in the system. And our financial system is fairly stable, and news also came about Yes Bank getting back on its feet. So all these factors mattered, and in the end the situation was back to normal. Not normal that it was about a week or 10 days ago, but certainly the downfall that we started seeing for last 1 week, that was halted, and we had impressive gains towards the later part of the day.
Sure. All right. So let's take this particular aspect forward, K. Badrinath, of the recovery. And it has been the highest ever intraday recovery as far as the Indian indices are concerned. What has prompted this, do you think? I mean, I for one, during the circuit breaker, did not expect such a recovery. But it has actually happened, and the Sensex and the NSE have bounced back. What has caused this?
Yes, I would concede that it is one of the, it's a very rare occasion when there is a, swing of almost 5,000 points on a single day. But when it comes to circuit breaker, this is not the first time that the circuit breakers have been triggered. Many a time, if you even see the dream budget of 1997 of Mr. P. Chidambaram and co. before 93, I guess. So then also there was an upward swing in a huge way, beyond 5%, if it is a plus or minus swing, always automatically the circuit breakers get applied or swing into action. And so SEBI is very seriously aligning these numbers very carefully. Henceforth, circuit breakers application is there. But today the swing that you have talked about is very important from 2 points of view. One, the trigger for downward slide is automatically explained in terms of coronavirus, oil prices, and the panic in the market, and the kind of restrictions that the United States has imposed and all that Mr. Tripathi has spoken about. But what is the recovery? That is very interesting in the sense that the market gossip is that there could be short positions that have been taken in a big way. Second is that there is a certain amount of value buying that has happened because when the market slides beyond a point, you find it is not going to be there forever. One big question that comes is, has the market bottomed out, and is it on a recovery phase? It may be too early to say that it's on a recovery phase and henceforth it has come back about 3,000 points and things like that, 1,500 points gain and all that. But point here is, one, short covering. Two, there is a lot of speculation. Three, it could be possibility is that looking forward there is a lot of value buying that has happened by the punters. And fourth part, what I foresee is that perhaps the markets are thinking that it could be that the phase is very temporary and it will get over, and we are back to normal business, at least if not today, in a few days. And also, if you recall, in the last few days, there were reports that Finance Minister has been speaking to all the stakeholders on the issue and trying to assure that there shouldn't be panic either in the economy or in the markets. But my guess is that this kind of volatility will continue, and if there is scope for value buying at the bottomed out market where you get a lot of good scripts at throwaway prices, it's a big opportunity even for people to buy.
Right.
Well, but it's subject to the fact that there could be further slide. We do not know because the kind of restriction, the kind of panic that has spread, the coronavirus has spread, and the oil war that has broken out in the Gulf with Saudi Arabia on one side and Russian Federation on the other side. So, like multiple factors are contributing to volatility, and my guess is even if you want to go for value buying, you need to be very cautious, and perhaps if it has not bottomed out and there is still going to slide, there is a possibility, like you have seen in the morning, it does, Sensex has dipped below 30,000 and now you recover it to 33. So there's big question there.
Right, absolutely.
That's the case.
There is a big question really as far as the swing factor is concerned, but taking the discussion forward and broadening the scope of the discussion, Professor, can we compare the present situation, health reasons apart, from an economic point of view, can we compare the present situation to what happened in 2008 going back to the Lehman Brothers?
I totally agree with you. The markets are in a panic state. And of course, this is the health, but that time it was the Lehman. And so if you look at the volatility in the market, and look at the uncertainty in the market. At that time also it was not very clear how the government going to pan it out. Of course, the epicenter was the US, and then they swung into action. We all know about the many things that they did, the unconventional monetary policy instruments that they had to apply to recover the economy. The US economy being the biggest in the world, accounting for 20% of the global GDP, and that spread everywhere. So I totally agree. Yes, one has to be worried about it, and similarities are quite close. I would also like to add the uncertainties that were there then, the similar type of uncertainties are up here. Therein at least we knew what has happened. Of course, we did not know what else remains in the closet and what else will fall off. Here in this case, the situation is becoming grim. Things are almost apparent. On one hand, we know what's happened to China. We also know what is happening in other European countries, Germany, as you just mentioned, that some of the political leaders saying that quite a significant population could get impacted. In America, we know it's happening something in Italy, we know something happening in the Gulf. Given this uncertain situation, the problem with uncertainty is nobody knows where we are, and therefore it's very difficult to take a position. But one thing is clear, the growths are going to taper off tremendously globally. Already the initial indicators are the global growth would suffer from 2.9 to something 2. China's first indicators are the growth which was around 5.6, 5.7 is going to be around 4.9. Now please remember there are spillovers. The spillovers are quite significant. Some of them, if you follow the gravity models, in and around China there's going to be problems. If you look at the size of American economy and the spillovers from the American economy, there are going to be problems there. Euro is also down. So if there are going to spillovers and the growth is going to take a plunge, then it is obvious that the global growth is going to suffer tremendously. What will it be like? Will it bottom out? When will it bottom out? Coronavirus has to really play it out and play it through. So now then the issue for us discussing about the market, has the market bottomed out? According to me, no, not as yet. There are going to be far more grim news which is going to come in, and the Indian market, as already discussed, is reacting to global environment, global circumstances and global developments. India, it is an island with its manpower, with some part of the isolation which the Indian government has adopted, which is very positive. The Indian market is going to be sort of an island of stability, but then what else needs to be done? If the similarities with the 2008 are there, I think something, the front runner, the first thing that I saw today, the RBI has announced some liquidity measures. I think that's in the right direction, and that is how it should be. The government itself has swung into action, spoke about various things that they would do to stabilize the market. The monetary authority has also swung into action. I think both of them will have to watch the situation more clearly and more carefully, and probably stand by the market to provide all sort of support and liquidity that is required. That would be one thing which I am very sure has to be done. So 2008 certainly plays back in the mind, and things that were done at that time, the unconventional monetary policy, which already started unfolding in the US. They reduced their rates, Fed rates. They've also announced trillions of dollars if required. Same thing probably we'll have to do in India.
Sure. All right. So taking this particular point forward, Mr. Tripathi, about the RBI. So the steps that have been taken, of course, the professor talking about the $2 billion currency swap. What do you make of that? And also, do you believe that the RBI needs to do more if you have to see some kind of stability as far as the markets as well as the economy is concerned?
You see, fortunately, there are several factors which are in our favor. One, of course, as has been pointed out, we are not as much integrated with the world economy and world financial system as many other countries are. To some extent, we are therefore an island, and the government has done well to insulate us from some of those shocks. But other favorable factors are that we have monetary space available, which in Europe, Japan, where the interest rates are practically zero, and USA, which are also very low, they don't have much monetary space. We have monetary space available, and the inflation, fortunately, again, now the latest indications are, is tapering out. So there is monetary space available. The liquidity position can be eased by RBI, apart from the swap $2 billion. And at this point of time, we have good foreign exchange reserves also. So there is no issue. So RBI can take those measures, like US and European banks have taken 50 basis point reduction. RBI can consider these things. And again, there is another factor, because the oil prices have come down, so that will create fiscal space in the government budget. The government can also come forward and make use of the fiscal space so created, which can be created by filling up the downfall in oil prices with some additional taxes and taking those resources for either government sponsored programs of expenditure or for reducing VAT or GST on some of the products, some of those areas which are at the moment under stress. So these measures may be required, and perhaps government will be well advised to consider them. Of course, the difference between this crisis and 2008 is 2008 crisis was basically a financial stability crisis, and the financial managers could understand here the crisis has been generated by a health issue, and till this point of time there is no direct remedy for that, and one doesn't know how far that will spread. So that remains an uncertain factor. But we in our government and also US, maybe we have overreacted and these are panic measures, but it is better to control that, like China probably has been able to control it, and I'm told now the Chinese factories and other outfits have started operating. So therefore, if the health issue is properly regulated and controlled, then the financial issues, the measures are known and they can be put in place.
Right, right. All right. So, K. Badrinath, let's talk about this particular issue. I know it's difficult to take a guess really to try and analyze and see whether the worst is over or whether the worst is yet to come. But what's your assumption really as far as the world economy is concerned and as far as the markets are concerned as well? Because we've seen a recovery across the globe really as far as the bourses are concerned.
See, The two issues. The world outlook for the economy has been already at less than 2%. You would be happy even if you would post a 1% growth. And that is also again very overtly optimistic, saying so. And also second part is, all depends on how long the restrictions across, the travel, tourism sectors will continue. Then how the oil sector will pan out in the next few months is a big question mark, with both the sides not conceding space. Neither the OPEC is trying to, or Saudi Arabia is willing to back off, or the Russian Federation is willing to back off, and henceforth they are going to pump big amount of oil into the markets, and that is pulling down there is no support for oil prices anyway. But let us not forget, the lower oil prices also means better fiscal space, like Mr. Tripathi was talking about. Perhaps that could be used, but to, in the Indian context, it could be to, contain the current account deficit, and also possibly provide some kind of a stimulus package, which many countries are trying to do. Like United States is, President has assured that there will be a stimulus package for both the markets as well as the economy. For him, it is no doubt a pre-election package that he has announced. But for us, we don't have any elections around. There is no political necessity as such. But the economic necessity may be there if at all you want to put together a stimulus package. But a lot of measures were rolled out in the last 6 months, at least in the 4 or 5 press conferences that Madam Nirmala Sitharaman addressed, to address the issue of slowdown. But now it is not slowed down. If you don't go into the negative territory, you should be happy. And when you need to perhaps forget about 4 and 5% kind of growth that we have projected in the budget numbers, and in the Indian context. My world context, yes, again the next 3 months will be very crucial if you want to see, if you think that there is going to be a recovery in terms of economic recovery. In terms of markets, yes, value buying is definitely there. A lot of punting, speculation, and also short covering will be there, and the brokers will make a lot of money out of it.
Right.
You and I, as small investors, may not benefit in a very big way, but definitely the punters who are going to be, day traders are going to be also going to do. And futures, in a big way, have, the prices have gone down in a big way. If the futures prices have gone down, that means an indication that the prices of, the valuations on different counters, both in domestic and global markets, is going to be low for some time to come.
Okay, all right, time now to get closing comments from all my guests with the best way forward and how to brace for what's currently happening and what's likely to come. Starting first with you, Professor.
Look, the first lesson that I've learned from this crisis, unique to this crisis, there should not be permission of having monopolized the industrial output. I think the world learned their lesson at a very high cost. China being the industrial hub, the industrial capital of the world, that was not the right thing. We should always have had, oligopoly is still okay, but we should have multiple markets, multiple production centers. That's the first lesson that we need to learn. And I hope we learn it fast. India is a very potential market. We have good amount of manpower. We have engineers, we have space, and we could probably be an alternative. The second is, I think India needs to very quickly position itself, and sadly, whatever the situation that has happened, India should be able to now take advantage of this position. I'd been saying it for a long time, since the trade war had started between the US and China. I said India should take in a position, it's globally very well located, manpower demographic is very, very positive. So the second thing is, India needs to quickly take stock of the position and position itself so that it can take over. The last and the third point I would like to mention is, it's going to be highly volatile time for at least next 3 to 6 months. And we should be prepared for it. We should brace it. The financial institutions, the Central Monetary Authority, and the government probably will have to prepare. There should be scenario analysis, and there should be plan A, plan B, plan C prepared, because our exports are going to get hurt. When the global markets suffer, there's going to be income disparities which are going to increase, income levels are going to go down. So therefore, this scenario analysis is a must. and risk management is very important in the next few months.
Okay, all right. Mr. Tripathi.
I agree. Not only the government and RBI and all the large companies, they should do risk analysis and do various scenario presentations and keep everything ready. And as I mentioned, I think we must persuade both the Reserve Bank and the government to use the monetary space and fiscal space available to meet this crisis successfully. And we should use it as an opportunity, as has been indicated by Professor. We don't seem to really take advantage of such opportunities which come once in a while. We should build our manufacturing and also build our exports with the opportunity which has just come about in a rather strange way. We should do that, and we should leave the markets to take care of themselves. If the economy is okay, the markets will take care of themselves. There will be volatility, but let the market players take care of that. Government need not interfere or intervene directly. The financial institutions, of course, should be very ready and watchful. Mutual funds, LIC, other financial institutions, to take advantage of the situations if the market falls and to make value buying. And I think we should focus on the opportunity which is available to us at this point.
Okay, all right. And K. Badrinath, close the show for us with your concluding remarks.
My guess is that the Indian industry has not risen up to the point to take advantage of the situation. We are only complaining that electronic sector more than 70% has to come from China and we are not able to import. On the other side, just because there are no imports, you are trying to rise the prices of some of the electronic items here rather than taking advantage of the situation and trying to use the unutilized capacities and perk up demand further.
Right.
So my guess is somewhere down the line, industry is losing the the matrix and getting out of the focus. My guess, I think there should be a concerted effort on basis of on the part of industry to come forward to take advantage of the situation, which it has not taken, nor has it shown any signs of coming together to take advantage of this. And if government is always pumping in money, that is not going to be the right way to do, because already a lot of spending has happened from the government side, and also the fisc is not. You cannot stretch it beyond a point.
Sure.
Fiscal prudence continues to be our yardstick, and I think whatever little money you save on the oil imports need to be better, focused spending needs to happen rather than just splurging across just because you want to perk up demand in the market.
Right.
So my guess is industry needs to partner with the government, come forward and use the unutilized capacities and do a lot of thinking on how to go forward.
Okay, all right. On that note, then we call it a wrap on this edition of The Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. What's coming out of this discussion is that the highly volatile time can be expected for the next 3 to 6 months. We need to brace for that. We also need to have risk management, which is very important, is what the panelists are suggesting. What's working for us is the fact that inflation is now under control and the Indian economy is not as integrated as the rest of the world with the global economy, and we are an island of sorts with a strong economic fundamentals in place. So these are some things that are working in favor for us, is what the panelists are suggesting. With that, it's a wrap on this edition of The Big Picture. See you again next time.